Bitcoin ETF have attracted more than 4 billion in net new flow by mid-February. While they bring some advantages over traditional Bitcoin, they also come with big risks you shouldn't overlook. In today's video, I will share top 4 risks of Bitcoin ETFs that no one talks about, and I will tell you honestly as a finance professional if I will invest in Bitcoin ETF myself. If you're new to my channel, I'm Charlene. I'm a chartered financial analyst with 10 years working experience in finance across Asia and Europe. I make videos on investing for beginners, personal finance. Like, subscribe for more content like this. And before we dive in, I just wanted to let you know that if you don't know what Bitcoin ETFs are and how they work, please check my previous video on this topic. I put the link here, also in the description area. So watch that first and come back later. Also, I want to clarify that I'm not dismissing Bitcoin ETFs altogether. They're a significant milestone in finance, no doubt. However, many discussions tend to emphasize their benefits only, leaving the potential downsides in the shadows. As an investor, you deserve the full story. The first risk is about the lack of ownership and missed benefits. When you invest in Bitcoin ETF, it's like buying a ticket to the Bitcoin roller coaster, but not owning the actual ride. Your investment is held by a custodian like Coinbase. This means you're not in control of your assets. Your private keys, which are like the keys to your crypto kingdom, are not in your hands. Now let's talk about the cool perks you missed out on if you don't own Bitcoin directly. So when you own Bitcoin directly, you're in for some really exciting opportunities. Imagine Bitcoin forks. These are like spin-off versions of Bitcoin, such as Bitcoin Cash back in 2017. If you own Bitcoin at that time, you will receive free Bitcoin Cash tokens. It's like getting a surprise gift in your crypto wallet. And there are airdrops too, and some crypto projects drop free tokens into wallets of existing coin holders. It's like someone giving you extra free money just for holding your crypto. And here's the kicker. ETF investors, they don't get to enjoy these perks. They miss out on extra tokens and added value that come with owning Bitcoin directly. And now let's talk about the potential for mismanagement. Custodians like Coinbase, who hold the Bitcoin for ETFs, can make mistakes or fall victim to hacks. What is custodian, you may ask? In plain English, a custodian for an ETF is like a guardian or caretaker responsible for holding and safeguarding the assets that make up the ETF. It's like parking your car at a valet service in a hotel. You trust them with your money, with your keys, but accident can still happen, right? It might be a really small risk, but it's still a risk. Now let's dig into risk number 2, the risks that come with Bitcoin ETFs as a financial instrument. The first is counterparty risk. Now you might be wondering, what is the counterparty risk all about? Well, with Bitcoin ETFs, you're adding an extra layer of risk. You see, there are 2 key players there. The ETF provider, think big names like BlackRock, and the custodian like Coinbase. And imagine it's like a game of Jenga, and each block represents a part of your investment. If either the ETF provider or the custodian runs into problems, whether it's financial troubles or operational behaviors, it's like pulling out one of those Jenga blocks. Your investment stability becomes a bit shaky, right? And that's the risk you need to consider. And now let's talk about management fees. ETFs, like all the financial instruments, they are not free to use. They come with management fees, which are like small bets taken out of your investment over time. Think of it as a tiny toll booth on your investment highway. And here's the catch. Some ETFs, they charge fees that may not be worth it, especially if all they do is mimic the price of Bitcoin. It's like paying extra for a fancy label on a bottle that contains the same water as the one from your tap. So these fees can eat into your returns, and you want to make sure you're getting your money's worth. Risk number 3 is about how ETFs can exaggerate downturn risks in the world of cryptocurrency. Now, we all know that the crypto markets can be as unpredictable as the weather. It's like a roller coaster ride, and when things like a nosedive, it happens fast. Here's where ETFs can make an interesting twist. Picture this. When the crypto market goes on a downward trend, ETFs might experience a sudden rush of people cashing out their investments. It's like everyone trying to exit the roller coaster at the same time. What can happen? Well, sometimes ETFs may just decide to shut down shop right when you thought about buying more Bitcoins at a discount. And now let's talk history for a moment. In other markets, like the one for shiny stuff, gold ETFs haven't exactly been gold mines. They have often lagged behind the actual price of gold. And sometimes it's not about a tiny lag here. It's more like the difference between the tortoise and the hare. So Bitcoin ETFs might follow a similar path. They may not keep up with the crypto market, and that's something you want to keep in mind as well. Risk number 4 is the potential threat to decentralization when it comes to ETFs. All right, picture this. Bitcoin is the poster child of decentralization, right? It's all about being free from the single bossy entity. It's like a wild horse running free on the digital world. And now here's where ETFs comes into play. They come in and gather up Bitcoins, centralizing it on big exchange and custodians. A custodian for an ETF is like putting a wild horse into a stable pony, but that's not what Bitcoin was meant to be at the very beginning, right? If so many people go to ETF route, there's a genuine risk. Bitcoin might lose its wealth and free spirit. It could become just another pawn in chess in the traditional financial game. And you can imagine actually a wild horse turning into a circus pony. And this isn't just about losing the core of what Bitcoin stands for. It's also about opening the doors to more regulations and more controls by those big players. It's like inviting the suits to a party when they were not even initially invited to. And we all know how that actually turns out. So in a nutshell, if everyone jumps on the Bitcoin ETF journey, the dream of a decentralized digital currency might just slip away. So after weighing all these risks, you might wonder if I will be investing in Bitcoin ETFs personally. Well, here's the deal. I think I will still dip my toes into the ETF waters, but only a little bit, probably less than 5% of my money, because Bitcoin ETFs, they still offer some level of convenience and accessibility to Bitcoin, which is appealing to me personally. Well, here's the crucial part. My advice for small investors to Bitcoin or overall cryptocurrency for that matter, it shouldn't account for more than 10% of your total net assets. Diversification is the name of the game in the world of investing. Personally, I prefer to spread my money across different asset classes like stocks. Actually, the majority of my money is in stocks. Also, I have real estate and bond and a small allocation in cryptocurrency. If you enjoyed this video, you're going to like my video on the top 4 profitable investments in 2024. I spent tons of hours collecting data and studying the investment research reports from those top banks and boiled down the top 4 investment ideas for this year. Like, subscribe, and click on the screen. I will see you in the next video.